After a deep recession, the UK economy started growing again in late 2009. In its annual health check of the economy, the International Monetary Fund says it's expecting growth of 1.75% in 2010, followed by 2% in 2011.
There's considerable uncertainty around this forecast, which makes it very important for policymakers to be vigilant and flexible.
The UK fiscal deficit was 11% in 2009, a post-war record and one of the highest deficits in the world. As a result, debt is rising rapidly. After assuming office in May 2010, the new Conservative Liberal Democrat government has moved swiftly to announce a number of important policy initiatives to restore confidence and growth.
The government has announced tough measures to ensure fiscal sustainability and also reduce the risk of a possible costly loss of confidence in public finances. Inevitably, the consolidation will slow short-term growth, but this is outweighed by the longer-term benefits. Although consolidation is necessary, it's important that it be fair, which means that it'll be important to protect the poor and the vulnerable.
Looking beyond the immediate future, there are many uncertainties surrounding the growth potential of the UK economy. The financial crisis not only depressed demand, it also put a dent in potential supply, which determines the economy's ability to generate growth and new jobs. Loss of skills in the labour force due to longer-term unemployment is one factor that could impact future growth. Unemployment rose from 5.5% to 8% as a result of the crisis. And even though it has recently started to decline, it has already affected the many workers who lost their jobs during the crisis. The lack of new jobs also affects those seeking to enter the labour force for the first time.
Encouragingly, unemployment has stabilized, but it's still too high. This crisis won't be over until we start seeing significant falls in unemployment, and that's going to make it very important to lay the foundations for sustainable, strong, and equitable growth.
Further job losses are expected in the public sector as the government starts implementing its planned budget cuts, so new jobs will have to be created mainly in the private sector. Given all the uncertainties surrounding the outlook, the government should be ready to adjust its policies.
If there's a sharp and prolonged downturn in the economy, the pace of fiscal consolidation may need to be adapted.
Monetary policy should also remain flexible.
The current accommodative stance of monetary policy remains appropriate. It will help offset the shrinkage in the budget. Yes, inflation is running well above the 2% target, but this is due to a series of one-off price level shocks such as the increase in the VAT, which will keep inflation above target in 2011 as well. But we do expect inflation to fall below target in 2012.
The financial sector is another key building block for the economic recovery. The bank stress tests carried out by the European Union in July 2010 confirmed the relatively good health of British banks.
The health of the UK banking system has improved, but it's going to be important to continue progress in this area to be able to support the recovery and cope with possible future shocks. This means that supervisors will need to maintain pressure on banks to rebuild capital over time and to also strengthen their funding models.
In sum, the UK economy is on the mend. Economic recovery is underway, unemployment has stabilised, and the health of the financial sector has improved. But the government should be ready to adjust its policies should growth drop back or speed up beyond what is currently expected.